Hello everyone and welcome to my morning report chart analysis videos on Thursday the 8th of February with me, Richard Perry, market analyst at Hantec Markets. I've been out of the country for a few days and on business, and the markets have changed considerably since I've been away, and let's have a quick look at where we're standing. Now, we've seen some significant recovery in the dollar since that payrolls report. And that sort of is continuing to an extent today. Less of the volatility that we've seen in recent days, but look at this recovery, this rebound that we've seen since last Friday. And it does seem to be continuing today. The big move has come in Treasury yields, where Treasury yields spiked higher, certainly on the longer dated yields, which subsequently have flattened the yield curve. And this yield curve, which so unfortunately not loading, which means that this 10-year yield pulling higher is due to the fear of inflation, really. 2.85 seems to be, or 2.88 the other day, but 2.85 seems to be a sort of a bit of a limit where the markets really came under significant pressure. Sort of, you saw a move back into treasuries as the markets sold off sharply. Look at that decline on the S&P 500 index. And the big chart is this one, isn't it? VIX volatility. What a massive jump in volatility we've seen. So that subsequently we saw the move back into treasuries on the back of that, but then we subsequently have seen the market selling off on treasuries and the yields pulling higher again since then. And a little bit of a move on treasuries overnight, where we saw comments from San Francisco Fed President John Williams, who's pretty hawkish normally in his comments, and he was saying that gradual and steady were the sort of buzzwords of his speech in terms of rate hikes. So that's helped to settle markets a little bit, I think, overnight. And interesting that we have seen a little bit less volatility coming through the markets today. We have still got a degree of dollar strength coming through against the euro, against sterling, against the yen, and also against these commodity currencies as well, but certainly not to the degree that we had seen previously. Now, we saw a little bit of a disappointing close on Wall Street last night. If I zoom in here on the S&P 500, you can see that the market was higher than actually close towards the low of the day. So subsequently, we have got European equities under a bit of pressure this morning. The DAX is underperforming on that move. So yeah, some key moves to be seen on these markets, and big changes in sentiment, certainly for the dollar, that we've seen in recent days. Now, in terms of today, we've got the Bank of England, but prior to that, overnight, we've had the Chinese trade data, which has sort of come out and suggested that we've seen some really key inflation data. Although it's, imports were massively higher than expected. As here we go, roll back into life in January. Exports also beat forecast. That's for some reason that's showing a headline of a news flow. But the actual increase in imports was 36%, yes, overnight on Chinese imports. So a massive reduction in the trade balance, interestingly enough. Now, what we have seen also is the market's sort of positioning a little bit, to a certain extent, ahead of this Bank of England meeting. Bank of England is not expected to do anything on rates. Also, we're expected to see a 9-0 vote in the minutes. But the interest will come, because it's Super Thursday, and the interest will come in growth expectations and inflation. And it could well be that the Bank of England gets a little bit more positive on growth, and perhaps sort of suggesting that inflation could come back, and that could give the Bank of England an opportunity to sort of set its stall out for possibly another rate hike. So that would be interesting. How the Super Thursday turns out. We've also got this afternoon weekly jobless claims at 1:30, 232,000. So my chart of the day is silver. And what we have seen is a sharp move to the downside. As the dollar has strengthened, we've seen gold and silver falling away. And silver is certainly no exception to that. 1680 was an old key pivot, long-term pivot on 1680, had been supportive through January, broke to the downside the back end of last week on payrolls. and subsequently the market has struggled to get it back, and you can see a couple of attempts back above 1680 failed, got sold into 1699 resistance on Tuesday, and subsequently we saw yesterday the market failing around 1680 again. So the acceleration to the downside is beginning to grow. Now 1630 was an old support that's been breached today. Looks like the market is falling below that level, and that sort of opens 16 figure. That is another old support, sort of old pivot, you could argue, that the market could well come back and test. But look at this 1557 level from December. That is now prime and open. Look at the momentum indicators turning increasingly negative. RSI 36 with downside potential. MACD lines accelerating lower. Stochastics negatively configured. Selling into strength on silver seems to be the way. You've got a downtrend channel that's now formed. You've got the MACD lines that are failing around neutral. You've got the RSI failing around 60. You could see any sort of strength being sold into now. 1640 has held up as resistance overnight. 1654 as well, that old low. So 1640 to 1650 is a key resistance area. Any sort of jump back into that within this downtrend channel that fails, I think, is a selling opportunity, because it looks like silver is now corrective. Big resistance comes in sort of 1680s to 17 figure now, which would also take you above this downtrend channel. So I wish you good luck in trading today, and I will speak to you later.